Hello, hello, hello. Hello, everyone, and welcome to the first of many Ledn Check In sessions. My name is Andrew Rapsey, and I lead marketing and product here at Ledn, and I'll be your host for the festivities today. One of the things we hear about a lot at Ledn is one of our differentiators is our client success team. We know that clients really appreciate the human interaction and service they get when speaking with one of our team members. So our thought with this Ledn check-in session is trying to replicate that experience at scale. So we're aiming to do these every few months, and we really view them as an opportunity for our clients and prospective clients to connect directly with some members of the Ledn management team. Speaking of which, I'm joined by Adam Reeds, co-founder and CEO of Ledn, and John Glover, Ledn's Chief Investment Officer. Welcome both.
Thanks for having us.
Pleasure to be here, Andrew.
Awesome. Well, one of my key responsibilities as today's hosts is to start off with some housekeeping. So we have 40 minutes for today's check-in, and we're going to spend the first 20 minutes of today chatting with you both about some of the things that we know are on people's minds. And then we're going to turn it over to a Q&A format for the last 20 minutes. And in that Q&A format, we're actually going to address some pre-submitted questions, as well as hopefully some live questions. But I'm going to be honest, we were absolutely blown away by the number of pre-submitted questions. So we may not have time for the live ones, but we will definitely do our best. I also want to just have a quick note here from our lawyers. So shout out to Ken and team. I'm supposed to remind the audience here that the information discussed on this Ledn check-in is intended for general information and discussion purposes only, and is not to be relied upon as constituting legal, financial, or investment advice. And for a full description of our legal disclaimers, please head over to our webpage, ledn.io/legal. And finally, I just want to say this is our first go at this type of session, so we may have the occasional technical difficulty or awkward pauses. Feel free to blame it on me, the host, and hopefully we get better at doing these with practice. So with all that said, let's get going. Adam, I'm going to turn the first question over to you. I know that you and Maurizio, our co-founders, published a founder's letter at the beginning of the year. Can you share a little bit more about the intention of doing that?
Of course. Yeah, transparency is everything at Ledn. We've always prided ourselves on great service and communication with our clients. And given everything the industry has been through over the last few months, and of course the people within it, we felt it was more important to share more about our 2023 priorities with our clients. And definitely these priorities are now more important than ever.
So when you talk about priorities being more important than ever, why do you say that?
Well, our industry has just experienced the most significant crisis it's ever been through. We've seen CFI lenders, many of who position themselves as good, prudent actors, ultimately fail. And because people's trust has been shaken, and rightly so, clients entrust us with their most precious assets, and they of course have the right to know exactly what we're doing with them and what we're focused on.
Okay, well, let's get into it. So you mentioned transparency is such a focus for you. So how do you plan for Ledn to lead the industry in transparency moving forward?
Yeah, for me, it comes down to embedding greater transparency and client control into everything we do. This means from our product innovation to our risk management policies, everything we're focused on is going to give more clients more transparency than ever before.
So when you say transparency in our product innovation, what does that mean to you? Do you have any specific examples or previews that you can give clients?
Yeah, let's talk about our lending product portfolio first. We don't think that lending is discretionary, and people around the world need our products more than ever. Our goal is to be the best digital asset lending platform in the world, and this means allowing people to build the loan product that's best suited to their needs. For example, in the future, Ledn clients should be able to enter the loan amount that they're looking for, the interest rate that they're willing to pay, and someday even the storage option that they want. For example, if they want to keep their collateral held in cold storage. From there, the Ledn platform should show the client the collateral required, the loan to value, and even the potential liquidation prices. In this example, the client's in the driver's seat. They're inputting what collateral, what type of loan they want, and they know exactly what they're exposed to and what they're not exposed to. This is what I mean about building transparency and client control into our product pipeline.
Awesome. So I'm sure everyone is excited about that, greater transparency, greater client control. But I'm sure the natural next question for everyone is when? When are we going to see these products live on the Ledn platform?
Yeah, look, it's actually one of our mottos and themes that we're impatient for progress. And so we take pride in moving as quickly, but also as responsibly as we can. So I'd like to say this is available tomorrow, but that's not the way innovation works. We have an engineering team that's hard at work at making this vision a reality. What I'm pleased to share is that launching in a couple weeks is the beta version of our new low interest loans product. Clients who sign up for this beta will be able to access Bitcoin-backed loans at annual interest rates as low as 1.9%, and including our admin fee, that's 3.9% APR. This is the first step in the product vision I just laid out. It's a growing assortment of our loans and functionality as clients will be able to toggle between our existing loans and the new 3.9% APR loans. This is beta, so increased functionality will roll out over time, and we welcome your feedback on how to improve and evolve this product. Low interest loans will be available based on jurisdiction and loan eligibility, and we may need to start a wait list depending on demand, as capacity will be limited to start. But don't worry, of course, our original Bitcoin-backed loans at 50% loan to value are still available as is.
Awesome. I know that when we sent out the emails mentioning the beta, there was a ton of interest on that low interest loan beta. So I'm really interested to see what demand is going to look like when it launches in a couple of weeks. So in that, you mentioned that it sounds like our approach is to launch pilots and betas in order to grow our assortment and eventually realize that long-term product vision you're talking about. When we talk about yield products, also known to many of our customers as our savings account, are there similar sorts of innovation in the pipeline and any innovation that you can speak about here today?
Yeah, look, you said it well. So similar to what we're doing with our loans, we have plans to build a full portfolio of yield products through betas and pilots first, and then full-scale launches with what sticks. So again, embedding transparency into our yield products is key here. We want clients to understand the relative risk and the return of the yield products they're selecting. We're working to build a world where clients will have the ability to opt in to different types of yield. A client should always be able to determine what their assets are being used for. So for example, if you want to take a very conservative approach and merely store your assets with Ledn and not generate yield, we'll have that option available. But if you want to take a more growth-minded approach, you can opt into a higher yield product with the knowledge that different types of institutional lending are driving the source of the yield. Our clients will be able to understand how their interest yield is being generated by Ledn and make an informed decision based on where they want to play on the risk and return curve. It's helping people understand the risk and rewards of how they hold their assets.
Awesome. So John, let's get you in here. We have an upcoming regional launch of what we're calling Ledn's dual cryptocurrency note. Is this part of the new yield strategy that Adam just talked about?
Yeah, absolutely. So as we've talked about, we want our clients to have choice in how they earn yield. And a dual cryptocurrency note, or DCN, as we call it, is one of the options available to clients who wish to earn that higher yield. We've actually been offering these products on a limited basis to our clients for a year or so now, and they are extremely popular. And what clients love about them is it puts them in the driver's seat for making the decisions on the components of the dual cryptocurrency note. So let me talk a little bit about what a DCN is to start with, so that you can gain kind of an understanding of how that works and where the choice comes in. So a DCN is a higher yielding instrument that allows those who hold Bitcoin and intend to sell that Bitcoin at a higher price in the future, or conversely, those who hold USDC and wish to purchase Bitcoin at a lower price in the future, lower than our current spot pricing. It allows them to invest into this note or put their cash into this note and earn a higher yield than they would on a typical savings account. So it's one of the yield products that allows the clients to be in the driver's seat with their digital assets. But maybe it's easiest to give you an example of this to help to understand. So let's say we've got a client who has 5 Bitcoin in their savings account, currently earning 2.25% annual interest, and this client would like to earn a higher yield. This client intends to sell their Bitcoin if the Bitcoin price rallies, let's say that they'd like to sell at 30,000 or if it gets to that level, and they're happy to lock into a 3-month DCN to gain a higher yield than that 2.25% savings interest. So based off current pricing, a 3-month DCN with a $30,000 price target would yield a client an annualized yield of 8%. That's 3.5 times greater than the 2.25% that they would earn in the savings account. The difference is that our savings account is open term. You can withdraw that at any time. So to get that 8%, you're locked in for that 3-month period of the DCN. And if Bitcoin is above 30,000 maturity, the client, instead of getting their 5 Bitcoin back, they'll get 5 Bitcoin converted at $30,000. So they'll get $150,000 back. And they'll also get the 8% annualized interest. If the Bitcoin price is below 30,000 at maturity, they'll get their 5 Bitcoin back, and they'll also earn that 8% annualized interest. And conversely, a client who has USDC in their savings account and is happy to buy Bitcoin at a lower price, they can do the same thing. They can earn yields of 20% or more while waiting for that market price to come down. So the client can choose the tenor of the DCN. They can choose the price where they're going to be selling Bitcoin or buying Bitcoin. And they can even target the yield and then determine which tenor and price results in that yield. So it gives them choice, and it allows us to give them as much transparency as we possibly can.
Awesome. Thanks for that, John. You mentioned transparency. So we've clearly talked a lot about transparency when it comes to our product innovation roadmap. Can you talk a little bit about transparency with risk management? I know that in the founders letter, Adam and Mao mentioned that we're really aiming to strengthen our approach there even further.
Yeah, absolutely. So in my role at Ledn, in addition to some other responsibilities, I also manage the relationships of our institutional counterparties. I bring 25 plus years of experience in traditional finance to this role. But one of the things that used to bother me, even in the TradFi world, was that there was not a lot of transparency. People were putting assets with the bank and earning yield or borrowing money and not really understanding what was happening in the background. At Ledn, we are very committed to bringing a lot more transparency into the digital asset space, and because it's really critical for clients to be able to make their own decisions. So first, before we start talking about all this transparency, let's talk a little bit about the elephant in the room, and that is all of the credit failures that happened in the past 4 to 6 months that adversely impacted a lot of clients at other firms. So at Ledn, we've always had a very strong culture of credit underwriting, which means we are extremely picky as to who we will lend assets to. And we base that off of a number of different categories, from financial strength to understanding fully what that borrower is going to be doing with those assets, understanding the history of the founders, making sure we have complete connectivity with the senior people at the organization so that we can act very quickly when there's news out in the market, for example. So we've got that strong credit underwriting, which means we're picky as to who we lend to. And then on top of that, we layer on our risk management processes, which means that even if we're willing to lend to a specific borrower, we are going to have very strict limits as to how much we're willing to lend and under what conditions we're willing to lend, regardless of the financial strength of that borrower. So when we combine those two, the strong credit underwriting with the very strong risk management processes, it means that we didn't end up lending to the likes of 3 Arrows Capital, even though they contacted us a number of times and most of our competitors were lending to them. They didn't pass our credit underwriting due diligence. We did, however, lend to Alameda, because Alameda did pass our credit underwriting due diligence based on the strength of their financials, even though we discounted very significantly some of the assets that were on their financial statements, because we really didn't believe in the value of those assets. So things like some of the tokens that they held, we discounted those very significantly. But even so, they were very strong financials. However, one thing, whether it's in the traditional finance world or digital asset world, lending carries risk, and it's impossible impossible to underwrite fraud. And so we did suffer a loss in the Alameda loan. However, our risk management processes, which, as I said, we layer on top of all of our credit underwriting, prevented us from having any of that loan loss impact our clients and our depositors or our borrowers. So we feel that that's really, really important. And that was an important differentiator for us. And it proved out in its efficacy because we're still in business when a lot of our counterparties without those strong processes are not. Now, on top of that, we are, historically we were lending to non-directional market makers. We are tightening that up even further. So we are going to, moving forward, be lending to market makers who make the vast majority of their money in traditional finance market making. Digital asset market making is a portion of their revenue streams. That way, we are more confident that if there is another impact in the digital asset space, they're not going to be affected too badly as a business as a whole, and therefore our loans are going to be still in very good shape. We're also going to be lending to some hedge funds and some proprietary trading firms on a collateralized basis. Again, everyone is going to have to pass through our credit underwriting due diligence. And we're only going to be accepting the strongest tokens as collateral, which really is Bitcoin, USDC, and Ethereum, because we're confident that there's enough liquidity in those markets that if we need to liquidate those assets, we're going to be able to do so. So we really, again, want to provide transparency. So when we are going to be lending to those different sectors, we're going to be providing as much clarity and transparency to our clients as we're able to under the NDAs that we'll have in place with our counterparties. But we believe that with strong underwriting, strong risk management, and transparency, our clients are going to be able to make better decisions.
Awesome. Thanks for that, John. So one of the things that clients who are looking for further reassurance that their assets are in good hands, they've also relied in the past on our proof of reserves attestation. Adam, obviously a lot of news recently on proof of reserves. Can you just quickly touch on what the future looks like for these PORs at Ledn?
Yeah, of course. So in 2021, we became the first digital asset lender to complete a proof of reserves attestation. And since then, we've released updated reports on a biannual basis through a partnership with public accounting firm Armanino LLP. As you can imagine, this was a big lift because there's different processes that are needed and different confirmations when doing a proof of reserve attestation for a digital asset lending company like Ledn versus just a pure play exchange. And so I guess just kind of coming out of that, of course, through the events of FTX and Alameda in December, just Armanino announced that it would stop providing financial statement audits and proof of reserves reports for the crypto industry. This was a decision, as we understood, not made by the crypto team, of course, but just broader Armanino policy as a firm, and nothing specific to do with Ledn or even other firms that they were doing proof of reserve attestations for. So we have to seek a new proof of reserves partner, and the timing of our new biannual attestation is still being determined. But as updates become available, we'll of course notify all of our clients by email. And we know that these are very important, and we're doing our best to bring it back as soon as possible. So we don't have a specific date, but we are planning for a release as soon as Q1 or early Q2 of this year.
Awesome. Thanks for that. So that actually marks the end of the first part of today's session. So we're now going to open it up to questions. And like I mentioned off the top, we were blown away by the number of pre-submitted questions that we received. We're going to try and get to live questions as well, but due to our time constraints, we may have to encourage those who have live questions to reach out to our client success team at support@ledn.io. So let's start with the first pre-submitted question. So we got one from our social channels, and it is basically, does Ledn rehypothecate the Bitcoin that is used as collateral for loans? John, do you want to take this one? Oh, John, I think you might be on mute.
Sorry about that. Rehypothecation is a term that we've been hearing a lot lately, and we've been hearing it with a kind of a nasty connotation. So it's really important to kind of clear this up and help people to understand what that really means. So typically when we're asked this question, our clients are really asking, do we use the collateral that they post with us to do something with? And the answer is, with rehypothecation, it means that we're allowed to use that collateral to pledge against a loan if we need to borrow assets to fund our retail loan book or to lend out to institutions. So with that definition, the answer is yes. Ledn has the right to rehypothecate loan collateral currency currently. And the reason that we do this is twofold. Number one, when we lend out that collateral, we're earning an interest on that. So it's going back to what we were talking about institutional lending and making sure that you've got proper credit underwriting and proper risk management. But we do that so that we can earn a yield. Earning that yield allows us to pay yields to our depositors. So that's how we generate the yield, is through lending that we can pay to them. We also use that so that we can have lower lending rates to our borrowers. So we do rehypothecate, again, to offer yield or to offer lower rates to the borrowers. And so when issues hit the marketplace, like the FTX Alameda thing, we react to that. And we reacted to that by recalling all of our institutional loans at that time to make sure that our client collateral was protected. Even though we were very comfortable with the vast majority of, all of our borrowers, but we wanted to be conservative and protect our collateral and our clients' collateral. So the key to rehypothecating is always ensure that it's done using very sound risk management and very strong credit underwriting standards. And when we look at the latest market events, Ledn has proven to relentlessly prioritize the safety and security of our clients' assets, and no clients' assets were impacted by the Alameda loan loss or any of the other events that happened in the marketplace. As mentioned earlier, we've trimmed down our list of institutional borrowers. We're tightening up our risk management policies further, just because it's a prudent thing to do at this time. But our long-term goal, as we've discussed earlier, is really to give clients choice as to what they want done with their collateral and make them aware of the trade-offs so that they can choose the solution that's best for them. So if you think about it, if a client chose to not have their collateral rehypothecated, so not have us take their collateral and lend that to an institutional counterparty, then the cost to Ledn is higher because we can no longer earn that yield. So we will have to lend at a higher interest rate to that client. But that's okay. That client is making the choice to say, I'm happy to pay a higher interest rate knowing that my collateral is being kept in cold storage. Whereas others may be very happy to have us rehypothecate or lend that collateral to institutional counterparties to reduce their interest rates. So it really is an opportunity to give clients even more choice than they've had today and give them complete transparency on what's happening to their collateral.
Great. Thanks, John. The next question is from Harry Muscle on Reddit. Are you guys discontinuing your services in Canada?
First off, great name. And the answer to that question is, of course, no, we're not discontinuing our services in Canada. Canada's our home. I was born here. We built the business here, and we're doing our best to offer as many products as we can here. We still have our Bitcoin-backed loan available, which is the first product we developed, and we look forward to growing that in this market. Unfortunately, it is true we do no longer have our B2X and savings products in Canada. And that's due to regulatory reasons. But as we'll talk about, we're working on ways to bring those back in the future under the right circumstances, of course.
Awesome, thanks. The next question is from Hope to Fire with Crypto, also a great name, on Reddit. And it says, caused by recent events, lots of people consider storing coins on a centralized platform high risk and not worth it. Not your keys, not your coins. Why should we trust Ledn while other platforms were clearly not worthy of our trust? And then we also received a second related question, which I think is exactly the same, but just a little shorter, which is how safe is Ledn? So Adam, could you take that one?
Yeah, of course. I think the first thing here is that not all digital asset lenders are clearly created equal, and that's obvious by the fact that we're still here today and others are not. And I think three key risk management pieces that I'd like to highlight. One is not participating in complex investment schemes. The second would be concentration risk. And the third is more detailed underwriting that John has spoken to. So on the first, not participating in investment schemes, think Terra Luna. Who can believe that 20% returns on a stable coin are sustainable? And for that reason, we did not participate in that DeFi protocol and did not expose our assets in that situation, and therefore were completely unaffected by the Terra Luna blowup. The second would be under or concentration risk, so not lending more than your net equity. So when you think about the equity that the company has in comparison to the amount that it would be lent out, there's again a reason that Ledn was able to absorb an Alameda loss or an FTX exposure while others were not. So that would be a concentration risk. And the third is underwriting. So as John spoke to, more strict underwriting standards, asking for financials and saying no when clients do not meet that underwriting standards. That was the reason that we did not lend to 3 Arrows.
Great. The next pre-submitted question is, when will the new company acquisition be complete and be up and running so you can offer your earn product to Canadians again?
Yeah, look, unfortunately, the transaction that we were previously working on did not come to a conclusion to bring that into Canada. But look, if there's anybody that's going to be able to figure it out, it's Ledn, and we're committed to doing so. As understandably, regulators around the world just took a big hit, right? We've got the Alameda and FTX situation that they're reeling from, and it's understandable. Regulators, their job is to protect those in their jurisdiction. And in Canada, of course, the regulator's job is to protect Canadians from losing their assets. So we understand their position, and we are working with them to make sure that we can build solutions that do exactly that, protect those and add more transparency to those that want to do more with their digital assets.
Great. Thanks, Adam. The next question just says home mortgage, and I don't quite know what the intended question was, but Adam, can you just generally give the audience an update on the Ledn mortgage product?
Yeah, we were very excited to close our first Bitcoin-backed mortgage, believe it or not, in December of last year. So it was a big lift to pull together all the different regulation that's needed to offer mortgages. So we're doing our best to roll this product out first in Canada, internationally, but very excited to have that one done. It was a first in Canada, and I believe a first for the industry overall to get a Bitcoin-backed mortgage done here.
Awesome. The next question is quite simply, is Ledn profitable?
So the answer to that one is over the past years, we measure, of course, our financial results on a monthly basis, and we've had several months of profitability where we're earning, of course, more than we're paying out, both in our expenses and making sure we have a sustainable business. We made a very conscious decision after the FTX Alameda to crawl back or pull back our institutional lending dramatically and de-risk our business further at the expense of short-term profitability. So again, prioritizing client assets and sustainability above all others. And that's as we look to go back to the market and increase our institutional lending, we will do it on a careful and calculated basis and on a goal of maintaining profitability again. So of course, we all want profitability. It's what we need in a business long term, but we're fortunate to have the flexibility to make sure we're not trading off long-term profitability at the expense of short-term profitability.
Awesome. Thanks, Adam. And then our next question was actually submitted in Spanish, but we've translated it, and it asks whether or not we have any current promotions.
We do have a referral promotion available that you can earn 10 USDC, and the referrer can earn 10 USDC as well by participating in our savings product. So the full terms and conditions are available on our website to roll that out.
Yes, and of course we do have the new product innovation that John and Adam talked about that is coming out shortly. So our next question, and John, we'll give this one to you. Give Adam a little bit of a break. Why is the new yield product better for the investor? And of course, when will it be ready?
Yeah, great question. So hopefully the earlier discussion when we were talking about the dual currency, cryptocurrency notes help shed some light on why we feel the next generation of yield products are better for the investor, because they will have choice, they'll have transparency, they'll be able to make a decision on risk relative to the yield that they're going to be able to get on the product. So we think that all of these products that we'll be coming out with are going to be very attractive to the client because they'll able to make that decision. As for when it will be ready, the dual currency note will be rolled out on our platform within the next month or so. And so that's coming soon. We're just bedding down the technology. And then for in terms of the other products that we've been discussing, they're going to be in the second half of the year. There's a lot that goes into building that the infrastructure for these products. So stay tuned to our socials and our client emails, and we'll get the information to you as soon as we have firm dates on those.
Great, thanks, John. So the next question is from Blindado on Reddit. Any real plans to support cheaper USDC networks so we can stop paying $30 per withdrawals? It's been on the list for years now and it's never been released. Please give us a concrete ETA.
Sure. So just to clear up one piece of information. So in October of last year, we actually lowered the withdrawal fee to $15 on USDC to reflect for decreasing fees on the Ethereum network. And overall, our goal here is not to earn any additional fees from withdrawals. What we're trending to do is pass on the network fees that we experience, again, just to make sure our business is sustainable. And that's both for the USDC that is processed over the Ethereum network, as well as for Bitcoin, clients paying minor fees to allow for withdrawals on Bitcoin. So what we do is we monitor the real-time transaction fees, and then we adjust our fees accordingly. To answer the question specifically, when it comes to USDC, we have evaluated supporting other chains such as Solana. But the issue is we want to be very careful when we think about other chain support. So other layer ones have had reliability issues. And so we want to make sure that when we make the decision and invest the time and infrastructure to support a different chain, it's both sustainable for Ledn and our clients. So it is something that we see as valuable. We, of course, want our clients to experience lower withdrawal fees. There's zero benefit for Ledn in having high withdrawal fees. It adds friction for everybody. So rest assured that we are looking into things. And on Bitcoin, of course, we've been examining whether we can integrate Lightning for near zero transaction fees as well. So excited for those developments, and definitely a priority for us to make sure that our product is as frictionless as it can be.
Awesome, thanks, Adam. Next question is from Maravizi007 on Instagram. Basically, what's your platform about?
That's a big question. I'll take that one. So I guess in a nutshell, Ledn is a financial services company building products that help our clients to turn their intangible digital assets, whether that's Bitcoin or USDC, into something that tangibly impacts their life. And that impact can be through savings, so Bitcoin and USDC savings account that pay yield on their Bitcoin or on their USDC with no minimums. Borrowing, so they can take out a Bitcoin-backed loan that allows customers to access their dollars without having to sell their Bitcoin. B2X, which is a Bitcoin-backed loan that's used to purchase more Bitcoin. So if someone's feeling like they want to own more Bitcoin, they can do that through a B2X product in one transaction. Trade product, so it allows our clients to seamlessly exchange between their Bitcoin accounts and the USDC accounts. And then, of course, the Bitcoin mortgage, which we announced last year, that allows Bitcoiners to use their digital assets to purchase real estate. And those product suites, as we discussed today, are going to continue growing. But that's what Ledn's platform is all about, bringing that financial services to the digital space.
Great, thanks, John. The next question is from Brett Shred on Instagram. When will you receive a license for USA residents?
Right on. Well, first off, thank you, Brett, for all the support you've given us on social media. We definitely appreciate you. Unfortunately, we don't have a specific timing in the US, and our approach to the US is similar to Canada. We're proactively working with regulators across the board to make sure our products are compliant in all regions, but we do have our Bitcoin-backed loan available in some US states. And so as you can appreciate, the licensing or regulatory requirements are different state by state. So it does depend on the very specifics of there, but we do our best to offer the products where we can in a compliant manner.
Great. Next question on Reddit. Inevitable Pepper 967, loving the names. Confirm U.S. deposits are no longer building interest. So it's March 1st, and my screen says your BTC legacy savings funds will continue earning interest until withdrawn. Your USDC legacy savings funds will continue earning interest until withdrawn.
Yeah, so let me clarify that. So again, in the US, it's now exactly the same as what we've done in Canada, in that previously in the US, we had grandfathered the savings account. So you had a balance, it would continue to earn interest. We've now further clarified that it no longer earns interest, but it's no longer lent out as well. So all of the US assets that were sitting in savings, all the Canadian assets that were sitting in savings are now moved into segregated cold storage addresses, held in trust, essentially available for withdrawal. So we understand, of course, why would you hold a balance if you're not earning interest in that respect for that product? So we want to make sure clients, know that they can withdraw their assets at any time. And that's, again, just being proactive on regulation and look to bring the products back when we can, but can do that in a sustainable manner.
Great. And I think this next pre-submitted question is kind of on a similar note. So it just says the exit from the interest-earning BTC and USDC coins was quite abrupt. Many of the investors in that are not accredited investors, which leaves them with having no future options for dealing with Ledn to get yield on existing coin holdings. Does Ledn plan to fill that gap and offer something in the near future? So, Adam, do you have any builds on your previous answer?
Yeah, unfortunately, it's the same if you're in the US or Canada, but just know that we are working, and it's in our best interest, of course, to offer these products as soon as we can.
Okay. And then the last pre-submitted question we had was the individual highlighted that, Ledn was one of the first companies to embrace transparency by offering proof of reserve. However, proof of reserve has recently received a bad rap in the US, whereby it was unfairly criticized as a sham audit. With this in mind, the individual has a three-part question. Okay, big one. What should clients know about POR, what it tells you and what it doesn't tell you, e.g., counterparty risk, liquidity management, and is there any way to be transparent about counterparty risk? 1B, is POR here to stay, or will firms move away from POR and offer up something else? And what might that be? And 2, if POR is here to stay, can you speak to which auditing firms are currently willing to do a POR, or do you see this as a hurdle to overcome, and what can be done about this?
Yeah, of course. So we'll try to address all of that. I guess the first thing to clarify is we will never state, and we want to also make sure it's clear, proof of reserves is not an audit. So a proof of reserves is intended to be focused on, do we have the assets to back up our client liabilities? So it's an exercise solely focused on making sure that we can meet our client obligations. An audit is more so about the company overall. So it would dig into the company's operations, the company's controls, of course, the company financials, to take into consideration all of those pieces as well. So we never say that they're the same, and because they aren't. So we want to make sure that clarification is clear. As far as different firms that are available to do it, the crypto team, as was announced this week at Armanino, has actually left to create a new firm called the Network Firm. So we're in good standing with that group, great group of individuals, and so we look forward to considering them as well as one of our potential future proof of reserve partners. So there are groups stepping up to fill this. As I mentioned, that we are working on bringing that back, and then I would say. The other piece is not all proof of reserves are created equal. So some firms will state, these are live, real time. Although that feels better because you get the sense that you're getting a buy the second. If you can think about what a lending business is doing, is we do have low assets lent out to third parties. So it wouldn't really be possible to do a real-time check on those third parties as well. So what we want to make sure that we're clear on is there is a detailed analysis done at a snapshot in time, but I would encourage you to both understand the proof of reserves in concert with our risk management procedures, because the risk management procedures help understand were the assets lent out responsibly, and the confidence that all of our clients have that those assets will be returned to back up their principal as well. So it's all of those together that are important to understand Ledn as a business and how we're managing things going forward.
Okay, thanks, Adam. One kind of late breaking question, just given kind of recent market events. So is there any impact to Ledn with the Silvergate news that broke earlier today?
Straightforward answer, we do not have any exposure to Silvergate.
Awesome. Thank you. I think we are done with the pre-submitted questions. So we're now going to try and get a couple of the live questions in for the next 5 minutes or so. So we had a question on YouTube when John was speaking about the FTX and Alameda exposure. How much of a loss did we receive?
I can take that one. Unfortunately, we can't state the exact amount of the loss, and this is for reasons because we are still in a claims procedure with the FTX and Alameda bankruptcy.
Awesome. And then the next one was, is it that the OSC regulation caused the discontinuation of savings in B2X in Canada?
What I can say is we proactively worked with the regulator to discontinue those products. We are in continual positive dialogue with the regulator, but it was, that was, I guess, the reason for it. But I want to say, it's important to state that we're working in a way that's collaborative. And I want to say that there's no, we want to make sure that they're comfortable with the products and we bring them back in a different way. But I think there's an important distinction there. It was not through enforcement. It was through a collaborative approach to work with the regulator to bring these back in a different manner.
Awesome. Great. I think there was one question that I've seen that is just asking a little bit about our low interest loan beta, asking what is the tenure going to be on that? I know it's still in beta, so.
I can jump in on that if you want.
Yeah, sure.
So right now the plan is that the tenor for our low interest loans is going to be the same as we have for our regular loan, which is it's a 1-year term, but it can be repaid at any time. That's the intent for the low interest loan. We may introduce fixed term tenors as well that again give clients more choice and would have different interest rates, but for the time being, that's the plan.
Okay, and I think we'll end it with just one more question. What is meant by an accredited investor?
I can take that one. It's actually different by jurisdiction. So, of course, we are dealing with existing rules across each jurisdiction. So typically, the intention, of course, is to make sure that there's available assets that can be exposed to loss or investment risk and set a different threshold. I know that many people around the globe feel that the accredited investor rules are inequitable or unfair. And so I don't intend to comment on whether that's the case, but I think it's more of just these rules exist and we have to play within them, and we'll do our best to innovate and make sure that we can remove friction while still remaining compliant. So, yeah.
Okay. Well, thank you, Adam and John, and thank you to the audience out there for all of the questions, the pre-submitted questions, the live questions, and of course for tuning in today. That's all the time we have today. So again, big thank you to all of you for joining us. Definitely keep your eyes open for more check-ins like this, or clients can check out, we're going to start client webinar series in the coming months. We'd also love to hear from you directly on how we can make Ledn's products and services more helpful to you. So if you have feedback, please send us an email at support@ledn.io. And if you're open to a phone call to discuss your feedback with the product team, please note that in your email. And then finally, I need to say that to stay up to date on all the latest Ledn news, please follow us on Twitter at Huddle with Ledn, or you can subscribe to our weekly newsletter at blog.ledn.io. And then for our Spanish-speaking clients, because we know we have a lot of Spanish-speaking clients, we will have a Spanish Ledn check-in coming to you very shortly that will be led by Maurizio. So stay tuned for details on that. And with that, thank you for your time. We'll go back to our day jobs here at Ledn and have a great rest of your week. Thanks, everyone.
Thanks very much. It means a lot that you all tuned in.